I'm Charlotte McLeod with the Investing News Network, and here today with me is Jeff Clark, metals and mining analyst at thegoldadvisor.com.
Yeah,
Thank you so much for joining me. Great to see you.
it's great to finally meet you, Charlotte, and talk with you. So you're doing a great job. So keep it up.
Oh, thank you. You too as well. You as well. And I guess since it's our first time talking, I'm sure people are familiar with you, but if you want to give me just a quick look at what you do at your website.
I wanted to share what I've learned over all these years and sort of pay forward or pay back what I've learned from other analysts, including Lobo Tigre, who's been on your show. And so I really wanted to talk about mining stocks, but it all starts with gold, of course, and silver, and why you need to own those. But most of the site is focused on who I think are the better mining stocks out there and why I like them. And I'm going to provide almost a newsletter service for free to investors to help them with their own due diligence. So these are the stocks that I own and I like, and I share them with everyone and why I like them and try to provide some education and knowledge about them. So it's a lot of fun. This is kind of what I want to do at this point in my life. So that's what I'm going to focus on at the site.
That's great. That's great. And so we're in New Orleans right now. We're at the conference there. You were up on stage speaking yesterday. We've seen a lot of people. I wondered if we could start broadly talk about sentiment in the mining sector. How's it feeling? I know you're also recently at the Precious Metals Summit as well.
Yeah, well, sediment. I think everybody knows who watches your show. Sediment's, in the dumps right now. It's bad, and the reason it's bad is because the dollar has gotten so strong, and gold and the dollar are inversely correlated. One rises, the other tends to fall, and that's what we're seeing right now. The dollar milkshake theory, if someone people are familiar with that, it has been absolutely proven correct. Right? It's been rising, it's been soaring, and that has put a lot of pressure on gold and silver and a lot of things, right? So I think that's why sentiment is bad. But the one thing that I've learned from history and just looking at the data, looking at history, looking at trends is these things cycle. Gold and silver cycle. It's very predictable, and I have some great charts on the site about showing all the different cycles that it's gone through. We're in a down cycle now. Three guesses what comes next, an upcycle. We just don't know the timing of that, when it's going to happen, how big it'll be, at what price point it starts at. But you need to be prepared now. You need to take advantage of these now because, as Rick Roll and many others have said, you actually make your money in a bear market. You just cash in a bull market. And so while a lot of us were long, gold and gold stocks and that sort of thing, this is a second chance. This is kind of how I look at it. It's a second chance. Any stock you missed before, any stock you bought that maybe is too weak to recover from all this, maybe another stock you want to own more of, this is your second chance. So this is how I'm looking at the market right now because there will be another uptrend in gold and silver. History tells me that. So that's what I'm investing on that basis.
Yes. Okay. So, and let's talk about what's going on with gold because I know people have been disappointed this year with the performance. And maybe we could go over headwind for gold because I hear about the dollar as a main one. You're mentioning the dollar milkshake theory. People may or may not be familiar with that. Certainly, it's been a buzzword here. So for you, what would you say is holding gold back? The main thing is the dollar.
Well, it all kick-started with a sell everything environment, 6 months ago or so, when everything was liquidated. Stocks, gold, everything, bonds, everything went down. So that's what kick-started it. And then the dollar started rising. That put more pressure on gold and silver and many other things. And you had the sediment shift, you had a risk-off environment, and so mining stocks just got completely clobbered. And I admit that I didn't really see that coming. And I was, almost fully invested. You always have to have some cash, right? But I was fully invested. I didn't see that coming. But that's the hand we've been dealt. We're at the blackjack table. That's the hand you've been dealt. You've got a 2 card showing. So what are you going to do? You have to do something. You can't just ignore this environment. So and ignore your portfolio. So I, all these things that have impacted gold and silver and impacted the mining stocks have, you know, showed me from history why we need to still remain long and that sort of thing. So we could talk about that for hours, but I think the main thing is, there is going to be another uptrend in gold. The catalysts are just too big, and I tried to show that in my talk yesterday, that ultimately gold has to win. The dollar can't win. It's winning right now, but there's a lot more chapters in this book that have yet to be written. And the end of the book, we already know how this story ends. Gold wins, not the dollar. That may take 2 to 3 years to play out. Who knows? But in the end of the day, it's going to be gold that's victorious, not the dollar. It can't. It's not sustainable. It's debt based. It's currency creation based. It will not win. Gold will.
And maybe we can talk about some recent news. We got our latest CPI data just this morning. Also this week we had minutes out from the Fed. That's something to watch. What are these things telling us about? I know we can't say when the Fed pivots or pauses, all of those words. But what are we learning? What do you see coming from the Fed?
Yeah, so the CPI came out. It was higher than expected. It was actually lower than the month before, but it was higher than expected. So that's why I think stocks sold off initially and that sort of thing, because it meant that the Fed's going to remain aggressive probably in raising rates. But there's something very interesting about this. The Fed pivot, that's what everybody's talking about, right? That's going to be the phrase of the year of 2022. When's it going to happen? Well, they are going to have to pivot for multiple reasons. They can't afford the interest on paying on the debt. They're going to cause a recession. They're going to cause a stock market crash. They're going to have to go back to QE. I mean, there's many reasons why they'll have to pivot. But the interesting thing I found was that the average time from the last Fed rate hike to the first Fed rate cut is only 5 months. Since the 1950s, the average time is only 5 months from when they stop raising rates until they start cutting rates. So that tells us they'll probably raise rates again another time or two or whatever. But a few months after that, they're probably actually going to have to turn around and start cutting rates again. That will be extremely bullish for a lot of assets, but especially gold and silver and mining stocks.
That actually was one of the slides yesterday in your presentation that stood out to me, because I was like, oh my goodness, I
Right.
had no idea. And because they make it sound like this is going to be a protracted hiking cycle. It's going to go on and on until they fix this. But
They can't. That data is actually true. That's the average. It's only 5 months. Some were only 1 or 2 months. None of them were measured in years. I think one was 13 months. They're all measured in months. That's it. I mean, the thing is, they really can't afford to raise rates that much more. The average rate on federal debt over the past 50 years is 5.7%. That would equal $11 trillion per year just in interest payments by 2045. I didn't misspeak. $11 trillion a year by 2045. They can't afford that, even remotely afford that. That would be more than 100% of the budget by then. So that's just one reason why they can't raise rates as much as they think they can. So there will be a Fed pivot, and that'll probably be when they stop raising rates or signal that they're going to stop raising rates. That could kickstart the next, bull market in gold and silver. But again, that's the short term. That's when sentiment shifts probably. But in the big picture, we're on the right side of this by owning gold and silver. We're definitely on the right side of this. History tells us so.
I want to ask you about silver as well. Silver has its precious side. It's got its industrial side. They're often grouped together. But which one do you think is more important right now for silver? What do you see driving it?
What's more important for silver right now?
For the precious or the industrial side, or are they working together?
Good question. Yeah. So there is a shift going on. Silver's, slowly becoming more industrially oriented. More and more uses and more demand is going to industrial use. And that's one of the reasons Keith Neumeyer, First Majestic Silver, is triple-digit silver. It's actually based on industrial use, when manufacturers actually start buying miners because they can't get enough supply. So that's a critical factor. The main difference, so when you look back at the price of silver versus the investment demand, there's a direct connection. And so, because industrial use is kind of flat, rises a little. Jewelry use is kind of flat, rises, goes up and down. Silverware, religious life, those things don't change all that much. The one thing that does change a lot is investment demand. And when investment demand goes back up, that's when the silver price tends to go back up. So the question is, what's going to drive investors back into push the silver price up, and it's going to be the whole connection it has with gold, uh, and that'll probably be not because of industrial use, but because of some type of monetary event or whatever. So there is a shift going on in silver becoming more industry oriented, but it's still connected to gold and it still rises more than gold. We saw that in 2020. Gold was up 40% in the rebound, the COVID rebound. Silver was up 145%. So there's still that going on, and so I'll be looking forward to that.
Yeah, and okay, so one thing that's kind of striking me in this conversation is you're pointing us to a lot of numbers that you can find. The
Oh,
numbers are out there. And you can see, you might not know when something is going to happen, but you can project what may happen. I think that though people tend to get caught up in trying to figure out what are the right numbers to look at. So how do you cut through the noise and find the right things to look at to tell you what to make of this?
well, I'm not a trained economist, so I just look at big picture. I like to focus on big picture, A, and B, I really like to look at, you know, the main data that tells me what gold and silver are going to do. And then I like to look at history. The main thing for me is history, and that's why I know gold is going to cycle up again. It's based on history. There's been multiple cycles just from the 1970s. It's not all about the 70s. There were cycles even in bear markets. There were cycles. So when I look at all those things and put them all together, I have to own gold. And again, it kind of does start with the U.S. dollar and the fact that it is. In my talk I said, fiat equals faulty, and it really is true. It can't last. It's not sustainable, and at some point, because that's all debt based and QE based and all that, gold is going to have to prevail. So I do like to focus on the big picture. I don't know if I'm answering your question right, but that's how I like to kind of cut through all the noise. There's 1,000 little data points all the time that come out, right? You have to put it in perspective and look at the big picture. So that's what I try to do.
Taking a step back. And so, of course, you mentioned you want to be helping people try to make the best investment decisions for the scenario we're in. So when it comes to the gold and silver stocks, can you give me a broad overview of the criteria that you're looking for? What do you want to see?
Well, I put that on my site. We have a tab that's devoted just to criteria, and the main criteria is the three legs of the stool. Many investors have heard of that before. The people, politics, and the property. So, and I do mean in that order. I look at the people first, and I look at the politics where it's at. So inevitably, someone will tell me about a great drill result from a company, and if I'm not familiar with it, the first thing I want to know is not about that drill result. I want to know who's behind it and where is it. Because if that company is run by a CEO or a chairman who last ran a marijuana company, has never been in mining, and it's in some war-torn part of Africa, I don't care so much about that drill result. So I look at those three criteria and I list lots of specifics on the website of what we're looking for. But it's those three things. You start there. That's a great starting point. And I think investors that do that can, be, do 90% better than most investors just by using that set of criteria.
Yeah, and so you can find, I think, some obvious red flags if you do that, like the CEO who
That's
came
right.
from a cannabis company. If you want to hone down further, how can you take the strategy further and you see a company that is looking pretty good, but how do you take it?
Well, then the next set of questions I have is going to be about share count, is going to be about dilution, is going to be about how much cash they have right now. That's critical in this environment. You have to have cash to weather through this. I look at the people and see, okay, have they weathered, bear markets before? If they've been through that and been successful with that. I look at the track record and what the stock has done for that CEO. Did he create shareholder value at his last companies? Did they have discoveries at their last companies? Did they advance projects and that sort of thing? I also want to know the $1,000,000 question. How much of your own money have you put into your stock? Because if you haven't invested your own money, there are companies that I've met where the CEO admitted to me they haven't invested a dime in their own company. I'm like, that's a non-starter for me. I'm sorry. It doesn't matter what that drill result is. I need to see people that have their own capital at stake. And I think a lot of analysts in the industry are looking at that as well. So that's how I start to drill down into things and you kind of sort of take it to the next level, to start weeding out companies.
Okay, that's great. And I believe you also go on site visits from time to time. So
Yeah.
talk to me about that, because I know that I often hear it's a really valuable piece of the puzzle.
It's extremely valuable. It's like the difference between watching a concert on TV and going to it live. It's very different. It's a very different experience. But the main thing is you get to see things firsthand. You get to talk to people. You have time to talk to them, kind of get a feel for what they're like. You get a feel for their character. That's important to me too. You know. But one example would be recently this summer I was on multiple mining tours, but one was Cassier Gold. And I read on the website that the land package is 59,000 hectares. I read that. I understood that. But when I got there, I realized just how big that land package is. I took a picture up on a mountaintop looking down and camps way off in the distance. And they have mining claims the whole way between where I was standing, all the way down to camp, to my right, to my left, behind me. Now I understood just how big this package was. And I think it's going to, they have years and years of exploration to do there. I intellectually understood that, but until you got there on the site, you didn't really know and understand just what the potential was. And now I do. Is that, it confirmed with me I made the right decision to buy that stock.
Well, yeah, and that reminds me, yesterday on one of the presentations, somebody was saying most people haven't held an ounce of gold. And when you actually hold it, that kind of conveys the,
That's
theory.
really true because it's got heft.
Uh-huh.
And I think a lot of people, when the very first time they hold an ounce of gold, it's like, oh, I get it. It's kind of almost instinctual. You understand, okay, this is real. This is money. This is not, paper or something that's going to go away. It's real money. So that's a very interesting observation. And I think that's true with a lot of people. So I would challenge anyone who's never held an ounce of gold in their hand, do it and see what it feels like. It's changes your perspective.
Yeah, and just to be clear on the company side, so are you looking only at exploration companies? Do you like any that are on the larger side? What phase are you
Well,
looking for?
once you've been in the industry a while, you learn some things. You start to eat further down the food chain, right? So I am looking more at juniors and exploration companies, maybe developers and that sort of thing. That's where I tend to focus, because that's where you're gonna get your biggest bang for your buck. I do like Lobo's pre-production sweet spot. When things are going to enter production, that's a very reliable indicator as to when stocks get re-rated. So I invest there as well. I'm not too much into producers. They're not. They're a little less exciting. Let's put it that way.
That's fair.
So I'm kind of like Babe Ruth at the plate, right? I'm going to strike out more than maybe other batters, but I'm going to hit more home runs too because of where I'm investing. So.
Right. And okay, speaking of, the investment approach, how do you decide when to sell? Because that's a crucial part of
That's
the
a
story.
great question. Yeah. The short answer is you invested for a certain reason in a stock, and when that thesis is no longer true or accurate, that's your sell signal. Another sell signal would be if the stock goes just completely ballistic and you have to take profit. So Snowline Gold is a good example, right? For my very first recommended it, it went 10x for me in the middle of this market. So that was pretty crazy. And that's a good sign, by the way, that you have to take profits. So I did take profits, but that's a stock that I would want to hold on for a long time, right? But that's a good sign that, hey, you have a stock that made a discovery in a horrible bear market. That is a reason for us to be optimistic about something, right? That a discovery still can be positive for a stock. You can still make money even in a bear market if you're focused on stocks that have that discovery potential.
Yeah, and I'm glad you mentioned taking some profit because I think sometimes people interpret it a little bit black and white, like you're either buying it or you're selling it, but there's that middle ground.
No, there's definitely middle ground. I really think you have to have the middle ground. And again, Snowline Gold is a good example because that's a real deposit. I mean, it's greenfields, very early stage still, but look at the drill result they just had this week. So that's going to shape up into something probably pretty exciting. So I do not want to sell that stock. I simply took profits because I had to. It went up 10x. You had to take some profits. And the great thing is I didn't have to sell 50% of it. I only had to sell 10% of it to get
Yeah.
my original investment back. So I'm still very long that stock, but it gave me lots of cash to invest in the next opportunity, the next Snowline Gold, if you will. So
And among the juniors, it's a bit challenging of an environment right now. What do you think? What are the main challenges that you see them facing? Because you're looking at these companies all the time.
well, cash. If
Yeah.
they don't have the cash, or they have to dilute, raise cash or issue shares at these low levels, that's not a good sign. But the companies that can raise in this environment, a lot of companies can't raise at all. But there are companies out there that are able to raise, and not only able to raise, but they're oversubscribed. So when you see that, the big names in the industry investing in a private placement or a financing of a company at these levels, that's a good sign that they like that stock, and they see good things potentially happening. So cash is a big one right now to be able to get through this.
Okay, so as we're wrapping up, I wonder if you have any final advice or thoughts that you would want to share with investors out there who are trying to figure out what to do right now.
The main message is I think you need to hold on because there will be another upcycle in gold and silver. History is very clear on this. That's going to happen. So invest for it now. It's a bear market. If you want to label this a bear market, you need to invest now because this is when you make or build your wealth. As right now, you're just going to cash in the bull market. So, and given the macro environment, uh, it's hard to imagine a scenario where gold doesn't win in the end. And we don't know when that's going to be, how long that's going to take, but you have to be long gold in this environment. You absolutely have to. Look at all the catalysts and the reasons to be long gold. There's more now than probably any other time in history, maybe the fall of Rome or something. So you have to own gold in this environment. Sure, we don't like this. We maybe didn't see it. It's a bigger downdraft than we thought. All that's true. But at the end of the day, nothing has changed in the big picture. You need to hold on. Use this as your second chance to, see if there's something you want to buy or need to add more ounces or add another mining stock or something like that. Hopefully, I can help with that at thegoldadvisor.com.
Okay, yeah, I hope so. I hope people will check it out. Thank you so much for coming to talk. It was great to hear from you.
It's great to talk to you, Charlotte. Let's do it again.
Yes, we should. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Jeff Clark with thegoldadvisor.com.